It's talking technical time again, and if I look at some of these requests, and this week we concentrate a lot on the emails because some weeks they get a cold shoulder. So unfortunately, the platforms like the WhatsApps and the Twitters, we neglected this week a little bit and focused on all the guys that send us some emails. Thank you so much. So let's kick off straight away with Chevron. And Marty asked about Chevron, and she said she's scared about Sasol, and we will maybe talk about Sasol in time to come. But she says she's scared of Sasol, but she would rather invest in an overseas petroleum company, and she mentioned Chevron. Well, Marty, if I look at the share price here, and of course this is a weekly chart, all the way since last year, August, it all consolidated and everybody thought that it can go higher. And then what we see is we saw that the share lost momentum. There was a high, a lower high, even that. And then Corona, of course, triggered a lot of selling. It rebound. But look what happens now. Now we see also a high, a lower high. This is almost a tiny tweezer top there. Some people will call that a double top, but for me it's just a few weeks apart, maybe 3 weeks. I will call it a tweezer top. The effect is the same, and the tweezer top came into play below that level there, and it almost played out now. But what I see here is a high, a lower high, and it looks like it can maybe test even this low of that level right down there at the bottom, Marty. So I'm a little bit nervous. It can maybe be a surprise to you, but this share can go down to 58.58. Other interesting for me, the story about this is that it tells me that maybe we're sitting on a point where the share price tells you that the economy is slowing down. Although the oil price is holding on, it looks like that this price is losing momentum, and let's see, maybe we can pick it up at 58. And at this point in time, Marty, I will just say I will wait for at least this line to turn into a support before I get positive about the share. And that just tells you that the momentum is down. So be patient. I think you don't need to rush into that. You can maybe fall into the trap to buy, and then you see maybe in a week or 2 weeks' time that you could actually buy it a lot lower. So I'm waiting for a return around here, and I don't see that. Well, Hubert asked about Macys. And I mean, this is the big retail engine of America, big retail house. Now, if you look at this, I mean, also in 2018, the high was about $40, and now it's trading at $6. Now, just see what happened with the Corona. The Corona took it from $16 to $5 in a matter of weeks. Now, if I look at this, Hubert, is the besties, and we'll maybe pick up a few shares with the same sort of systems. And what it tells us is that the market tries to find a level where it is happy or where it's maybe in line with the economy. We know that markets and the economy rarely is in sync together. What this year is telling us, this consolidation tells us that nobody is sure. Now, if I look at this chart, I will do the following. I will either use this horizontal resistance line to trigger a buy for me, or I will use this trend line to say, where can it go? And there you are. This is a clear indicator that momentum is 100% the downside. You can see that it's trying to find its feet above this, let's call it support line, but it was a resistance all the way. Just to play safe, I would rather wait for the share price to break this resistance line, and that is sitting at 930. If it can break above 930, it can give you maybe the first uptick out of this consolidation, and above 930, it can easily go back to this level of 1479, but as I will say, it is early days. So wait for this line to break. If you use then a stop loss, use 466, a little bit of a big stop loss to me. I would rather stick to this stop loss, and that will be 593. And if it turns around, I think this company can maybe surprise. What this consolidation also tells us, that maybe some of the, let's call it retailers, are not that keen to buy stock And Macys, of course, big distributor, big player in that field. Well, let's see if they can turn around. Let's look at Kraft Heinz. Kraft Heinz, there you are. And Andre asked about Kraft Heinz, and Andre looks like it's almost the same thing as Macys here. It's also in a massive consolidation, and we can do exactly the same here. What's interesting that this was a strong resistance all the way, and then it broke above it, but that was only briefly. And then it gave us a, let's just show there. Show you guys, there you are. It gave us a brief bounce, but there was a tiny head and shoulder. It made everybody nervous again, and the moment that happened, suddenly the share price just fell off a cliff, and it looks like it wants to go all the way down to 21.71. So I will use this line as maybe a possible level of entry, and that means if it goes to this low, of course I will change my tune if it breaks above 34. And always keep in mind that technical analysis is almost like a two-edged sword. It can either go up or can go down. That's the difference between fundamental analysts and a technical analyst. A fundamental analyst will give you a level of value where it says there's the share, it's trading at value or a little bit below value, or it's maybe a little bit too expensive. The technical analyst will say that in this band of a consolidation, the informed investors, they're trying to make up their mind. So technical analysis is you can almost say a art to measure emotion, where a fundamental analyst look at the fundamentals of the company and they say, yes, it offers value or not. If we look at this chart, this is the consolidation. Let's hope that it breaks to the upside, because if that can take place, then at least we know that this massive sell-off that we did see in Kraft Heinz, it's over and done with, and then we can move up. And we know over many years that if a share drops, let's say almost fall off a cliff, because that's what happened, it was as high as 100 and now it's 29. If it can consolidate and it breaks up, that will be seen as positive. But I think it is early days. Let's look at Alamos. Tonight we've got quite a few requests on the gold, because remember, everybody said that gold can just go higher and higher and higher. Now what happened was, like all the charts, and you guys that's watching the show for many years will know that I am always nervous if I see a formation like this. That tells me it's a lamp pole formation. It rallies just way ahead of itself, and it needs to give us a pullback. Look what happened in the past. It rallies up and then it comes back. It rallies up, and this steep rally is always followed by a little bit of a pullback. Now, this is exactly what we're seeing here. Alamos Gold, rallied from March from $3 all the way up to almost $11 in one go. That's just too good to be true. Now, what I'm worried about is the following. Look what happened here. There's the lamp pole formation, but now the share price broke this line, it turned it into a resistance, it bounced up, it's almost a goodbye kiss. Now a goodbye kiss is usually either positive or negative. In this case, it touched the resistance line and it confirms more selling. And where was the warning? The moment it took out that low there. The moment it took out that low of $10, you should know, listen, the share wants to go lower. And if you look at it, maybe Alamos Gold maybe reach for this level. There you are. And if it falls even a little bit further, you can maybe go all the way down that previous support, and there you are. And go to either $8.56 and maybe even as low as $7.45. And from almost $11 to $7.45, that's a nasty drop. So always keep in mind that nothing goes up in a straight line. Everything that rallies just too fast, too quickly, always comes back. And I always say that many times to clients that phone me, and I say, whenever you've lost a position like this, and you didn't run into it and you didn't chase the momentum, wait for it to pull back or wait for another opportunity in the market. The market will always give you some other opportunities. Let's have a look at Uber. I mean, this is one of those top companies in the world. And Billy asked about that, and Billy asked me, he said to me, Frans, I want to buy Uber because I think we can maybe see some higher prices. Well, first of all, Billy, look at this. This is a double top. You can see there. There's the top. There's the top, and that high is around $37. And look what happened. A few weeks after that, it's a weekly chart here. It goes back to 37.15, and then it lost momentum. What's the important thing here? The only way that I can see it go higher, if it takes out this double top, it moves higher. Because you will say to me, Frans, there's a low, there's a higher low, there's a beautiful double bottom. What is the golden rule? It must take out this top, give us a new move to the upside. In actual fact, if this double top is true, and it wants to play out, it will be confirmed below this level. There you are. It will be confirmed below that level. There you are. And that will be confirmed below 29.87. And guess what? If that plays out to the downside, it can go all the way. And I just do a projection there. It can take it almost to this low of $22. So for me, it must go above that before I can get excited about it. At the moment, it looks like it rather wants to come and test this line. But, I mean, Billy, if it breaks that line, it can give us a beautiful move, because then you can say this double bottom got confirmed, and it can go even higher. Of course, what will happen? It will take out this high. Well, let's see if it does that, because everybody just loves Uber, and maybe that is the stock of the future. Well, visit our website, www.fransdeklerk, for our services, and we will chat again.